Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for Tuesday evening, the 25th of June, 2024. We're just about 6:30 p.m. Central Time. Interesting day. Lot going on that I'll talk about in SPDR's ETFs as to what's going on. You're entering a blackout period, too, where you're not going to get buybacks, and the companies won't be able to buy and sell their stocks for a while, so that happens, too. We are looking here at still a very mixed bag in most of the stock indices. You'll notice today, and you'll hear about it, that NVIDIA came back up about 5.5–6% after dropping 13 over the past few days, and the market got excited about that. But in the evening, there's very little follow-through right now. We did see that the market rotated back to buys in the NASDAQ and the S&P and selling in the Dow and the Russell on this news. The gold market's gone flat again. I can say, if anything, I'd probably be more bearish than bullish now at this point, but it's caught in narrow Bollinger Bands. It's not breaking out one way or the other, but I have a downside bias now. I had an upside bias before. I've changed that. In the dollar index, I have an upside bias, and I'm still bearish on most of the foreign currencies. I don't see anything that's changed there. And as we look at the bonds and notes, this is like watching now paint dry on a wall. The ranges have narrowed in dramatically. Why have they narrowed in? Because the market's getting ready for a couple of events. First, it's going to get into the presidential election, as you know, on Thursday night. That'll be heavily watched. The second thing will be, and more important, actually, because I think the election's all going to be posturing. How do they make these two gentlemen look good? What's their response? They got to make Joe Biden look 10 years younger and spry with it. And Trump can't be Trump. He has to act more presidential if he's going to win people over. So we'll just see what's going to happen. I could be wrong in what I'm saying there. Everybody has an opinion. But on Friday, we get the PCE number, and that's where traders are going to see what it is. The arguments have already begun with the market saying the Fed's waiting too long, and that if the data starts weakening, they have to move sooner. Now, one of the things I've said, if you can get 3 months of weak data, which would be, now think about it, May went by us, and it was weakening data, no question about it. If June's data is weaker, and July, well, then you go into your August time frame, and if that's weaker, that opens up September in a major fashion for the Fed. If these numbers come out for June higher, or lower June, higher July, just to give you an example, the Fed, I think they want to see that there's a trend. We're all worried, at what point does the Fed abandon data and say we're forward thinking and we don't want to see labor get hurt too bad because that's the driving force behind the economy. They've already got that. It's the inflation part. They only have 2 mandates. They've got it. But if they hurt labor too much, then they've got to do both mandates again. And they don't want to get caught in that. That's the American issue. Central banks all over have different mandates. So it's a question of how they go about what their mandates are. Ours has those 2 mandates. So in the grain markets, the heat and the rain did not damage the crops the way that people thought. We saw those numbers yesterday. We talked about that. And boom, the markets went down fairly hard today off of that. Now they're getting ready for Friday for the grain traders. They'll get an acreage report and ending supplies. Those will be important to the market. So when we look at the S&P, I'm going to repeat, I'm a broken record every night. If the market finished up right here, it's an all-time high close. How can you be anything but friendly? When you come to the daily bar chart, you can see that you've got a churn going on. You see this right through here, and as I pointed out yesterday, you have a pattern of lower highs, lower lows. The market is looking at support if it wants to drop down here at 54.73, the 18-day average of closes, with resistance where it's been running. It keeps hitting the Bollinger Band, pushing on it, no question about that, but staying within it and then correcting again. Here's what you look at, in my opinion. You're losing the embedded reading tonight. Did we lose it during the day today? Tuesday. Remember, already in Wednesday's trade, you did. So the way that I teach charting, the fact that you're under a 79 reading, I think the traders bailed today on this long position. And I think now they'll be looking at the market that before it gets up and over that high that it made, prices will challenge the 18-day average of closes. I don't see this in a downtrend. I see this in a correction of a market that's overall bullish, but a correction underway. In the NASDAQ, it's the same thing. You lost the bullish embedded reading. I think before you get up over that high, you're going to hit the 18-day average of closes. When we look at the Dow, never did embed, just got overbought. It's fighting a battle to stay at or above the 100-day average in green up to the upper Bollinger Band. Interestingly, if you take a look at right here, Monday, you had an outside day up. If you take out the low of an outside day up, the target's often the closest moving average or the Bollinger Band, the closest of. It went right down, took that out, and stopped there, and that's where you're stuck right now. So those are the rules. Sometimes those averages are much further away, but in this case, not giving us much of an edge. And I am still in the bear camp in the Russell because the weekly charts are still very bearish, and I see just a bear market rally up to the 18-day average. It's got to get up and close over that and take out that high in the same time to tell me there might be more. Maybe you can get up to the 2075 level, but right here, no, I'm still in the bear camp thinking the market might be able to drift back down. Here's the negative on the trade. You're already in oversold territory. Oversold territories don't excite me to tell people to deploy new money short. When we get to the notes and the bonds, look what's going on. You've got a market that's overbought. I mean, I hate to say this, but so far over the past 5 days, you couldn't even get in trouble in the market if you bought the high, sold the low. It's just not moving very much one way or the other. The same's in the 5-year notes. You know that'll change. But that's what's going on. They're trying to hold on to overall uptrends, but they need data, and that's what the market's waiting on. In the dollar index, you have an embedded reading now. So until the market sees the red number close under 79, I contend traders will buy the market looking for the upper Bollinger Band again. But again, if you get under that 79 level, I think if you haven't bought, I think the traders will pull their buys. In the euro, the market is still in a downtrend. Is it embedding? Well, both numbers tonight are under 20, and that's what they have to be. But if we go into Tuesday, both under 20, but not the day before. So you just have an oversold market in a downtrend, could go back to the 107 level, but trying to make something out of nothing when you're oversold is difficult. In the British pound, an oversold market, looking for a bounce. I look for pretty good resistance up here. I just don't see anything fresh in that market. In Bitcoin, what are you doing? You're flirting with getting back over the 20 level. Now, anything on a close over 21 tells me the market has run its course to the downside. It hasn't done that yet. So this is still a bearish market with an embedded reading. And the pros probably sell the rally and out if they close over 21. I think that 21 number is the key here. So you can see how the market has been staying down there with that reading all the way through it. And getting under the Bollinger Band, I know I said it yesterday, the odds of staying under a Bollinger Band are over it 5% of the time. So you do get to it. You do hit it. That is what the purpose of having a 95 percentile number is. But staying under it one way or the other, you don't play for that. Could it do it? Of course it can do it. And the narrower the bands get, the more probable it'll push on the band to the upside or downside to get away from staying that narrow. But when they get wider, no, be careful. Now, look at how all of a sudden you had been up to 460. We talked just yesterday, will the market be able to hang in here? It came back and checked out the 18-day average and just gave you a complete collapse in the market. Interesting. When we take a look together at the Brent crude, you're still embedded. So until it loses this, until that red line's under 79, the pros are still, in my opinion, buying. I told you, the question is, can you get the 18-day average to get over the 100, or is it going to come up here, kiss it, and turn down, and bring the market back down with it? One of the elements you have to look at when you're trading this market now, especially WTI, is our weather patterns. Excuse me. Any serious hurricane, be it in the Gulf, be it on the Atlantic, that comes in, can create great disruption in the market at this time of the year. We're seeing massive storms, as you know, in the center of the country. I'm in Chicago, and today they shut down the airport. O'Hare Airport was shut down for an hour and a half. As the storms they had to let them come in. They weren't landing planes either. They just made everything stay above the storms and wait for it. And then the airport reopened, and away people were able to go. And it's a monster travel season. So speaking of that, you know you're going to get demand out of the gasoline market at this time, and you're getting that right now. Now, the one thing President Biden cannot do is allow this market to get away from him to the upside. Gasoline, a gallon nationally was about $3.10 at the beginning of the year. It's about $3.47 now. If you had a bad hurricane, you could go $3.75, $4 with the driving season. Don't get it, and he's got the power here to release the strategic gasoline that he's got to contain prices on the East Coast, and East Coast is very important to this. So you're fighting a battle at the 100-day average up to the Bollinger Band in an overbought market, but bullish, not bearish, until the market decides to possibly turn down. And in natural gas, even the heat didn't lift this market. And we caught that for my subscribers up here. And I kept saying, they're going to increase the natural gas production. You got to be careful. Speaking of that, now the European Union is getting ready to shut off all natural gas imports into the Union and from Russia. And this is very important, all right? It's taken them as they're fighting with them, as they're giving money to the Ukraine. They're still giving money to Russia, and now they're figuring out a way around that. There's been nothing good that you can report going out of Gaza and Hamas, and now the battlefront can easily move to Hezbollah and Lebanon as the borders there become under more Israeli troops moving there, Hezbollah trying to attack. So we will see what goes on. As you know, in the Red Sea, the Houthis have basically shut down shipping in a massive fashion. And now the question is Israel going to get itself into another problem? Today in Israel, the ultra-Orthodox, the courts passed what Netanyahu did not want to see, where they have to now report for military service if they're able-bodied. So this gets very interesting as to what's going on. It's a popular and unpopular war within Israel from everything I read. Both sides have very big opinions on that, and the rest of us hate what's going on. We want something to come to an end, and I don't see how it can as long as Hamas is going to stay there and they make the demands they are. There's got to be a compromise. I'll leave it go at that. All right, so if you're a trading view person and you use indicators on that, I don't know if you're aware of it, but we've built a suite that you can get from our website. You sign up for it on our website. We turn it on and away you go. So how do you get the suite? Well, you go to our website and under our client resources, go up to the top there because you'd be a client. You'll see Trading View indicators. You sign up. We then turn it on within 24 hours for you. And then you log out, back in, and you go, whoa, I've got Ira Slow Stochastics, the swing lines. Everything's working there as you'd want it to work. So I think you'll find it fascinating and interesting to work with. So how does this all come into play for you? Well, it's pretty simple. What you do through here is you are able to work with window envelopes, the swing lines, the Bollinger Bands, and the way that I teach slow stochastics, my view of it. And what I mean by that is I've modified the indicator and it'll match up with what I'm doing here. You go to iraepstein.com and you go to the top right, you'll see Client Resources, give it a click or move your cursor up here. I'll catch up with everybody in the morning. You have a great evening.